$1 song right there. Yeah.
Giggle,
Yeah.
giggle.
It's been a while. It's been a while. Staring for you. It's been a while. It's been a while since we've sat in these chairs.
How are you?
I'm good. It was a long day, but good. How are you?
I'm good. I got my hair done today,
You look so good.
and it's so nice because I needed it.
I need a haircut so bad. My hair grows so
Snooze,
fast.
you lose.
I know. I snoozed.
I'm wearing a t-shirt for the first time today.
What do you mean for the first time?
I've worn sweatshirts this entire.
Really?
It just means
that's gonna be loud.
that's
Really? Let me just get really. Really?
It just means that spring is here and it's warm in here.
Springtime. I hate winter. I hate winter so much.
Winter is way long ago. You don't even have to think about it.
So glad
Is
it's
my mic
spring,
in the right
almost
spot?
summer. I don't know.
Yeah, I
mean,
think so.
Welcome to Two Hearts, One Bitcoin, a podcast that's been a little lazy for the last couple of weeks.
Nah.
We had some stuff going on. You know,
Yeah.
we're getting into the rhythm of consistency.
I mean, we could have totally bailed on this because we're going out of.
That's true. We're going out of
Town.
town. That's true. We could
But
have.
we didn't. We squeezed it in.
But we didn't. And
yeah.
serendipitously, for better or for worse, so this entire episode is going to be about taxes. And I
Yes.
don't think it'll take a long time, but April 15th, tax day, coming up here soon.
Appropriately chosen.
I didn't realize that until
You
today.
didn't? No, that's why I chose it.
I swear.
Sell a goose.
Well, we had some folks ask us to potentially cover this topic, and I feel odd covering it only because I know that through search of ChatGPT or YouTube, there's actually probably going to be a lot better coverage through those mediums,
Sure.
but still a relevant topic to cover. So, by golly, we're going to talk Bitcoin taxes today.
Love it. I think it's important to talk about even just introducing the high level stuff about taxes, kind of like we did with the altcoin episode, where it's just nice to determine that there is a difference between Bitcoin and altcoins. It's nice to just make sure you know
Yeah.
that there are tax implications to different strategies with cryptocurrency and Bitcoin. So,
Well, the other reason I feel like it's relevant is in the lore around Bitcoin and
Yeah.
all of the scaries, the scary stories, things of that nature. Right, gotta get your arms
I
good.
don't know what to do
the
with my
pod.
arms in a T.
I feel like it's fair to say that at least over the last, call it 5 years,
Yeah.
in pop culture, there have definitely been scary stories of people that didn't understand taxation, and rightfully so, walked into like really precarious situations with the IRS, things like that. So
Yeah.
more things kind of depressing Bitcoin and potentially the narrative around it. So it's a fair topic to talk about. But in addition to covering that, which again, not going to be a very long conversation, I also feel like it's timely because we're going into tax day. But also, currently, it's April 2025. We also had kind of a crazy start to the month. And by we, I mean
The whole planet.
the United States and the world,
Yeah.
specifically with, so the short story being tariffs kind of being imposed unilaterally. Sorry, there's
Yeah,
bug.
they're bugs.
Unilaterally across the board. And that just caused global markets to just tank.
Mhm.
Now, I even say that, and as I say that out loud, it's like, well, Taylor, let's define tank. Like, you know, S&P drops by about 10.5%, 11%. So did NASDAQ. Dow Jones is somewhere in there. But I think the world kind of like freaked out a little bit. Naturally, Bitcoin also took a dip as well, along with other cryptocurrencies. But I was thinking it relevant because right now in April, where you're already very maybe money sensitive because of taxation,
Yeah.
a lot of people have maybe seen
Good
some
point.
happier days with respect to their portfolio, things like that. So I don't know. It just all feels like part of the fabric of the conversation and relevant to this point in time. But anyways,
Anywho.
you did some digging on Bitcoin and taxation. What topics do you feel are relevant to cover today? Like if you had to give the audience a top 2 or a top 3 pieces.
I think defining what a taxable event is
Boom, number
is
1.
important.
Yes.
Holding on to your Bitcoin
Yeah.
for a longer term strategy is
Sure.
going to be a little easier when on the tax brain.
I gotcha. So number 1, go through like what a taxable event is, its relevance to Bitcoin. 2, how might that apply to Bitcoiners, like different strategies you could take there. I like those.
Yeah.
Anything else?
3, there were some good stories that I think, or you shared a good story with me that I think we should talk
What
about.
not to do.
Yeah, because there were some components
Yes.
of that story that I really wouldn't have thought about
Yeah.
of like when you can really get screwed.
Yes. Yes.
I don't like to lead with fear, but taxes and
Oh my
where
gosh,
you
I'm afraid of taxes all the time. So I feel like I am I am like the most prepared.
we have some
for
good
this.
tax blunder stories in our history. But I don't like to lead with fear, but there is a component to the pain part of
Yeah.
taxes of how it's going to make sure that you are diligent going
Yes.
forward. So I think sharing some of that pain is going to be effective. I don't
Yes.
love leading with fear, but we all know taxes are a little ominous and can really bite you in the ass if you're not prepared earlier on, or at least aware when you're experiencing a taxable event. So that would be my top
Also,
3.
Perfect time for our disclaimer. We are not financial advisors,
Perfect.
nor
Well
are we
done.
tax professionals. So definitely talk to a professional.
We are here for your
You know,
entertainment.
we hope these stories and anecdotes are informative to some extent, but definitely do your own research and talk to a professional. But I agree. Maybe even starting out before getting into the whole taxable event things. And again, this is just our point of view. I'm pretty darn sure this would be confirmed by a tax professional. I think the first thing is like, how is Bitcoin treated in the tax code? And today it's treated as property. So very similar to an equity or a bar of gold, right? It's something of value that, you know, basically the IRS says you own that thing. It's property. And the reason that's relevant is it is distinctly different than currency, which I feel like, again, over the last several episodes, that's kind of like the big ethos, right? Like one of the things that we've been posturing towards is, could Bitcoin ever become a new base layer money, or at least alongside of it, a massively leveraged store of value in some way that a lot of people would treat similar to currency?
A unit of exchange.
Yes, and there that we're going to come into like where that taxable event kind of thing plays a role, but they're distinctly different. So TLDR, too long didn't read. Bitcoin is treated just as similar to an equity, like a stock that you would
That's a
own.
really good point. That's yes.
First thing. So second thing is, and again, we're going to use the examples of, you know, an individual going into a brokerage account, right? Let's say Charles Schwab or Fidelity or Vanguard, and they might throw some dollars in there and say, I'm gonna buy some stocks. I'm gonna buy some Apple stock or something like that. And they push the buy button, and now they maybe have purchased, I don't know, $500 worth of Apple stock. I don't know what the stock price is today. But at that point, when you've now procured, you know, said artifact, said asset, certain things occur, meaning I'm now holding on to this thing, and if I do anything with it, more specifically sell it, right? The IRS is curious. Their interest is piqued by these moments because you, as a holder of that asset, a couple of things could occur. Hopefully, if you are selling assets, you're making money on those. The value has gone up over a period of time, and woohoo, like maybe the Apple stock has gone up from $500 to $550. You've like pocketed yourself $50. Yay for you. You could also sell at a loss. Maybe the share goes, or the Apple stock goes down, and for whatever reason, maybe you lose $50. Like, right, those are all implications. But regardless, the IRS wants to know what went down.
Sure.
It wants to know because, especially if there was a gain, if your worth went up as a result of holding said asset, it wants its cut of that gain. And so like that's like, again, basic tax principle in general of a taxable event. But in this case, it's I've purchased an equity, I hold it for a certain period of time, and I sell the equity. And if there was a gain, again, in this case, $50, the IRS wants its cut. And there's different ways that the IRS might treat that, depending on how long you've owned or held on to said asset. So in the United States, again, not tax advice, so do your own research, but if I've held on to a stock or a bond for a year or more, woohoo, I'm excited because in doing so, I've avoided what's called short-term capital gains. Short story of that is it's basically I'm avoiding paying regular taxes, the W-2 tax that I would normally pay on my salary and things like that. That's how that equity would normally be taxed. But if I wait the year, I sell it, and then there's a gain, I only pay long-term cap gains, which is just a smaller tax rate comparatively. So What it's hopefully doing is encouraging people to hold on to those equities for a little bit more. And again, in doing so, if there is a gain, you get to participate in that gain a little bit more.
Well done. That was very clear.
Let's see. What did we miss in that? You hold on for too short, again, under a year, you're going to pay more taxes. Over a year, you pay less taxes. That's a win. And in this, especially, again, the Charles Schwabs of the world or anywhere where you're doing this buying and selling in brokerages are required to keep tabs on what you sold, what you didn't sell. So typically, when you're right now in tax season and you're preparing for things, those brokerages are sending you relevant tax statements that you'd either plug into TurboTax or you'd send to your CPA. So that way you're appropriately reporting to the IRS, like, here's what I made, and thus here's how much tax I'm going to pay on it. I think the last thing I'll say in this is that, and again, this is not a hard and fast rule, if you are doing that kind of buying and selling of equities, and it's in your own brokerage, it's on you to ultimately pay the tax burden on those things.
Sure.
So I could be wrong. There could be really advanced brokerages and systems that are set up to automatically somehow collect taxes and pay the IRS. I really don't think that exists. So the reason I carry that principle forward here is that just as you would have to be responsible for buying and selling of equities within your normal brokerage account, that same responsibility translates to Bitcoin. But I'll pause there for a second.
Okay, to be more specific, and this is what I was looking into, is that technically correct me if I'm wrong, and I know that we're doing this all in very general terms, and you keep kind of throwing in the disclaimer. Disclaimer, insert every 5 minutes. When it comes to a taxable event, though, a taxable event is technically the selling of something, not the buying of something.
Correct.
Okay, because you said buying and selling. Technically, the taxable event, though, is in the selling.
You are 100% correct. If I buy said Apple stock,
that's not taxed.
No, no, because again, I've exchanged money for said asset. I'm holding on to it.
Yeah,
and so at that point, let's even say that the stock goes up in value. That would be sometimes referred to as an unrealized gain. It has gone up. Technically, my name is on the sheet of like, ooh, I own that share. So like, yes, there is value that has gone up over a period of time.
Yeah.
But I haven't realized it yet because the value is stuck in this piece of paper called a share, an agreement between me and Apple, right? So to extract value out of it and realize the gain, I have to push sell, and that is the taxable event at that point in time.
Cool. Just wanted to make sure that was specific.
No, I love your questions because it's inspiring a couple of other differences or maybe, again, parallels to keep people in line. I think the other thing that is relatively easy to understand in a brokerage account is if I'm buying and selling. I see these like big buttons, buy and sell. And I kind of understand, like, I'm going to buy Apple, I push the green buy button. And if I'm going to sell it at any point in time, I push I think it's red or blue, whatever, sell button color, right? And I know in doing so, I'm transacting between, at least in our state, US dollars, right? The currency I've chosen to load into my brokerage account. And if I'm selling, I'm also getting back US dollars, right? And of course, yes, depending on where you are, globally, you could, I'm sure, use euros or different currencies.
But your currency's probably staying.
But that's the transaction, right? Between the base layer currency and the artifact that I'm getting back.
Okay.
I can't, for example, I can't sell a share of Apple for a share of Google.
Right.
Right. So I can't move. There's no interoperability
leapfrog over that.
No.
Pulling it out of the market and then putting back in. There's no market to market.
It's very binary.
Stock to stock.
I can only buy and sell the
that makes
thing.
Sense.
And again, I'm transacting in the currency, again, in our case, USD. So I bring all this up, and again, I think to your point, to say that this is where cryptocurrency in general, and yes, of course, Bitcoin, I think in the early days started to get a little crazy.
Yeah.
The first thing being same thing. So now we're going to transition. Boop. We're going to change the view where instead of me being in my traditional brokerage account, maybe I'm inside of my Coinbase account or something like that.
Yeah.
I load in some dollars, $100, and I buy $100 worth of Bitcoin. Again, purchasing Bitcoin, not a taxable event. I'm now a holder.
I'm going to say that one more time.
Yes, do it again.
Purchasing Bitcoin is not a taxable event. Buying the coins is not. Or I'll say,
at least
taxable.
In most cases, in all the cases that you and I know about, they are not a taxable event in doing so. So, huzzah, I've gone into Coinbase. I buy some Bitcoin, and maybe I even move the Bitcoin to a wallet. Not a taxable event to move Bitcoin to a wallet. That's just, I'm storing it. It's like I'm putting it in like a special place. I'm like, yes, it's mine.
So it's like if I have dollars in my cash dollars in my wallet and I go to put cash dollars into my savings account, that's not a taxable transaction. I'm just moving from one storage to another.
Yeah, exactly. Now, the same principles as equities apply, meaning if I ever sold my Bitcoin, I absolutely have to pay taxes on any gain. Right. And again, in the spirit of like pop culture, it's like you had people being like, oh my gosh, I made so much money on Bitcoin. Woo. I push the sell button. Right. And then they hopefully realize that they will have to pay taxes on that. And the same rules apply. If you held it for less than a year, you're going to pay short-term capital gains tax. If you held it for longer than a year, yay for you, you're ultimately going to pay less tax over a period of time. So that same principle applies.
I didn't realize it was a year. In my mind, it was 2 years, but I think that's why I'm thinking real estate is usually 2 years.
Real estate is different. So at least in our state of California, I believe this is all of the United States, but at least in our state of California. So if we hold on to a piece of real estate for at least 2 years,
that's
right,
the capital gains.
Well, it's a tax exemption, meaning if we had, let's say we bought a house for $1 million and then 2 years later we sold the house for $1.2 million. So we're registering a $200,000 gain.
Yeah.
That is tax-free money with two things to consider. Number one, we had to have owned or held the house for 2 years or more. And number two, as a married couple, that gain cannot exceed $500,000 or $250,000.
That's what, okay. But there's a 2-year time horizon on that, and
Correct.
1 year, but they are different. Okay.
Yes, that one's like, I think for those that have built wealth in real estate, that's like the best one.
Yeah.
Because it is literally $0 in taxes, 0, which is nutty. So, but let's even go back to this Bitcoin example, right? So I purchased some Bitcoin. Say I maybe purchased Bitcoin at $10,000. Again, some fun jargon. And this in theory would apply to equities as well. But at that point, when you push the buy button, 10 grand worth of Bitcoin, that becomes what's called your cost basis. So the floor, here's how much it was worth when I bought it. And let's say right over a year or maybe like 18 months, year and a half, maybe it goes up to $20,000. It's doubled in value, and I push sell. So at this point in time, the reason these things become important is because, again, whether you're using TurboTax, you're going to your CPA, the questions that whether the software or the professional is going to say is, great, okay, so you sold some Bitcoin, good for you. Did you make money on it? You're like, yeah, I made some money on it. Like, awesome. What is your cost basis in Bitcoin? You're going to say, I bought it for $10,000, sold it for $20,000, great. You gained $10,000. We got to pay taxes on that $10,000 in that case. So where things got a little wonky though in crypto land is one, and this is just me throwing my opinion out there. I think because it was such an abstraction, like it was so different from normal equities, bonds, things of that, ETFs, things that people were used to, is it felt like play money.
It did it. Yeah.
Again, I'm like kind of reaching like a couple of years ago, but right, I'd throw in $500 to Coinbase. I'd play around, right?
You almost feel like everyone would assume you wouldn't owe taxes,
right? You're like,
but it's like video game magic money that doesn't really,
Yeah, that's how it felt, right?
Yeah.
And again, there was so much hype around the various meme coins or the altcoins or things of that nature. It felt so passive, or it seemed so passive, I would say, in the market to like throw a couple bucks here, throw a couple bucks there. But I think where, again, the narrative, the scary narrative started to come into play was when things actually went well. So there are, in the big cycles around Bitcoin, like 2017 being like a big one, or 2020, 2021, when you have these like big boom moments of Bitcoin, you also see all the altcoins kind of trend with it. So if Bitcoin goes up, altcoins tend to go up. And I'm not going to profess as to like why that is. It's sort of like one market influencing another.
Sure.
But I think what often happened was people would say, let's say again in that case, I invested in Bitcoin at $10,000 and it's now at $20,000. Okay, so I'm sitting in my account, my Coinbase, and I see 20 grand. Oh my gosh, in my head, I'm doing the math. I'm like, I just made 10 grand. That's incredible. Well, what if I go ahead and take $10,000 of it, right? Or maybe I take all 20,000 and I'm going to move it now to an altcoin or a meme coin. I'm going to move it to Dogecoin, or I'm going to move it to anything else, or Litecoin, something else. Because in my head, I'm like, oh my gosh, again, I'm doing some calculations. The Litecoin is so much cheaper than Bitcoin, so I'm going to move all my money into Litecoin, and then that thing's going to skyrocket, and I'm going to make even more money, right?
This is going to sound like a stupid question.
No such thing.
Because you said when you're selling stocks and bonds and things, right, you're going stock to US dollar to bond. Can you go Bitcoin to altcoin?
Yes.
Aha. So that's probably where it feels more like an arcade, is because you're not cashing out into the currency you started with.
Correct. Or at least you of course could, right? I could.
But in this example,
in my example, this is where people.
This is where you think, well, I'm just almost feels like moving it from a storage to a storage, like almost,
It doesn't feel like you're doing anything.
Right. It doesn't feel like you're like
quote unquote taxable event.
No.
Right. But it absolutely is. So let's like pull that back again to like super duper clarify. In the normal purchasing of a stock, right? I take $100 and I go buy some stocks, an Apple stock or some amount of Apple stock. When I'm done with Apple and I say, I'm ready to sell you Apple stock, there is no interoperability between that Apple stock and anything else.
Yep.
You have to sell it for US dollars or, again, any other major currency.
Sure.
British pounds, euros, whatever it is. Boom. So I'm like back to US greenbacks, right? In the case of Bitcoin, and again, in these boom cycles where people would make a bunch of money on these major cryptocurrencies, it would seem passive to just take that amount of money, take that amount of Bitcoin, and transition it to a different coin, right?
Sure.
And so a couple of things are happening here. Number one is this means that in the cryptocurrency space, you do have interoperability between a vast number of cryptocurrencies. And again, it's not infinite necessarily, but yeah, you can definitely exchange Bitcoin for Ethereum, Ethereum for Bitcoin, Bitcoin for Litecoin, Litecoin for Ethereum. Like there's literally, it's a lot of different options you can do it. And coming back to our earlier example of the brokerage account, in these cases, when you are transacting and moving from, in this case, one cryptocurrency to another, the current tax code, IRS, says that's a taxable event.
Yeah.
So this is where people got in trouble because a couple of things. Number one is they weren't maintaining good records and diligence of when they bought. So how much did I buy of what and how much was it to determine cost basis.
Okay.
And then when they would, for example, move from, I'm making this up, Bitcoin into Ethereum, right? They weren't tracking, how much was Ethereum when I bought it?
Easy. I wouldn't blame them.
Right. Nope. And the reason is because, like, right, so at this point, the IRS, right, it wants its chunk of any gain that was made. So again, let's go back to our example. $10,000 of the Bitcoin. Bitcoin goes up and it's now sitting there in my account. I'm like, oh my God, I have $20,000 of the Bitcoin. And let's say I push it all into an arbitrary altcoin.
Okay.
The moment you've moved it into an altcoin, that is the checkbox to the IRS that says you have had a taxable event and you realized a gain.
Yeah.
Even though you put it into a different cryptocurrency, you had something.
Yeah.
So it's sort of like stamp marked into history. Like you had a $10,000 gain at that point in time. So people are like, woohoo, oh my God, my Bitcoin went up. I just moved it to this altcoin. I'm going to be a billionaire, right? And then some stuff happened, such as, oh no, the altcoin starts to go down.
Sure, you're playing with really volatile stuff.
And all that beautiful gain of 10,000 I just had just starts to erode.
But it wasn't 10,000 because it was...
Well, let's keep going with this example. Okay,
okay.
So it was, let's say again. So we'll go all the way back to the beginning. I had $10,000. I put it into Bitcoin.
Okay.
And 6 months later, woohoo, it's now worth $20,000.
Okay.
Right? So, I'm going to take this $20,000 of the Bitcoin and I'm going to move it into Ethereum.
Okay.
Right?
All 20 grand.
Random. Okay. All 20 grand moves over there. Right. Okay. Unknowingly, I just had a taxable event because, again, according to the IRS, I just had a $10,000 gain.
Okay.
Right. But now I'm holding on to $20,000 worth of Ethereum. And let's say Ethereum starts to go down. Right now, so instead of $20,000 worth, I'm holding on to Ethereum. It's only 18,000, then 16, then 15, then 12. Right.
Okay.
And so in your mind, you're like, my gain was erased. Darn it. Right.
Like being at the slot machine and you're on a roll, and then you did max bet.
I'm fine. It must be zero. There's no taxes due because I lost my gain, and IRS is shaking its head, being, mm-mm-mm.
You owe
had-
on that first transaction.
Exactly. You had a gain. So we don't care that you lost it in the second. You owe us taxes on that $10,000 gain. So I'm jumping, not really ahead. I guess this is your chapter 2 of we've sort of established what a taxable event is and a little bit now of the variance and difference between traditional equities and cryptocurrencies. So this is the story I want to read.
Well, that was my third one. Before you hop into that, I
Okay,
just kind of
okay.
want to like think back. Also, I think I need to like take these plants outside because there are little flies. Again, spring is here. They keep zooming around your face. So when you sell, rule of thumb, selling, think taxable event.
If I'm just changing storage vessels, meaning I'm moving from a Coinbase custodial account into a wallet that I own, not a taxable event. If I am exchanging that Bitcoin for any
Anything else.
other cryptocurrency and there is a gain, I've made some money
Cha-ching.
and I'm now moving into something else. That's a gain, and the IRS wants their chunk of cheese. That's what they want. So, again, coming back to where people got in trouble.
Mm-hmm.
Maybe they knew this, maybe they didn't, right? We'll give them the benefit of the doubt. But even if they didn't, some of the hardship became like, let's say they got to tax day.
Yeah.
And they're in TurboTax, so they're talking to their CPA.
Yeah.
And the CPA is like, oh, I hate to tell you, like, you have to give me the tracking on all of those things because you could owe some money here. I think that was the first like brick to face moment for a lot of people because they weren't keeping proper records of how all of these things moved.
Coinbase doesn't help. Is there, or like, are any of these exchanges like helping you keep track these days?
I want to be careful to say that I know that there's
Or
some
tools.
version of the record inside of Coinbase now or other major exchanges. What specifically they provide, you would still probably have to do a lot of manual work to like log the appropriate things again for your own tax prep or for somebody like a CPA. There are absolutely services that are now deployed that sort of overlay and record all your transactions that are doing this in the back end for you. Nice third-party middleman service that are helping with something that's kind of complicated. But all that to say, so these people weren't keeping good logs. And this is where it burns the most, is when, again, you had these massive swings. And so this is where the story comes in that we both read. So apologize for reading in advance, but...
Are you just going to read it?
Probably.
Yeah. I think it's not too long.
Let's see.
Story time.
Let's see. This is from a random person on Reddit, but I'll skip around.
Okay.
It started in late 2021. I was just messing around with a few $1,000. I took $10,000 and, through what I now know was sheer dumb luck, rode some early Solana pumps and DeFi shitcoins to a portfolio peak of about $70,000 by February 2022.
Okay.
So late 21.
So he is up 60 grand from his original investment at this point.
And so late 21 throws in 10,000. Early 22, oh my gosh, they had like 60K increase to 70K, right? Literally it says, I wasn't a genius, I was gambling, but at the time I felt like a god. So this is, I feel like, again, part of that.
Yeah,
you're like,
the
woo,
high, sure.
right?
What do we call altcoin or arcade? And
Altcoin
I
arcade.
like that.
Every time I jumped from one token to another, I was stacking gains, and every one of those trades, taxable. But I didn't care. It's all crypto, I told myself. I'll figure it out later. Later came in the form of a brutal bear market. By May 2022, so what is this, February, March, April, May, 3
Just
months
a few
later,
months later, yeah.
my 70,000 had bled down to about 50,000, then 30,000. I panicked. I swapped into stable coins. I tried to salvage what I could. Nothing worked. The final blow, I went back into Solana thinking it would rebound. It didn't. I was left holding $8,000 worth of Solana by the end of the year. So a $10,000 initial. Oh my gosh, skyrockets to 70K, bouncing up and down through all sorts of different coins.
Move around, shift.
All the way back down to 8,000. So right at the end, to that person, it only feels like, I guess I lost $2,000. I tried to forget it. I ignored my Coinbase emails, buried the ledger, aka the hard wallet, in a drawer, pretended it never happened.
Oh no, sir.
Then in March 2023.
Okay, so we're like 8 months later. I don't know. A year later, roughly.
Yeah, we're a year later. I got a letter, a fat white envelope from the IRS. Inside a tax bill for $42,000. $42,318. Ooh, that would be a rough envelope to get. Apparently in 2022, I had realized 130,000 in short-term capital gains from all my swaps and jumps between tokens. They didn't care that I had only cashed out a fraction of that. They didn't care that I ended the year with less than $10,000 to my name. The IRS saw my trades as income. The price I paid to learn shitcoins, not the IRS's problem. So long story short, let's see.
I feel like this story is actually probably pretty typical in the beginning.
I tried to explain it to my friends, to my parents. No one understood. They thought I made $130,000 and just blew it all on something stupid. They didn't get that I never even touched fiat. It was all quote unquote on chain, meaning it was stuck in coins. But the IRS doesn't live on chain. They live in spreadsheets and W-2s. This person ended up on a payment plan with the IRS, but let's see. So yeah, I paid $42,000 in crypto taxes on my $50,000 in Solana, and I'm still paying. Remember to calculate your taxes before withdrawing. So that's, I think, the scaries that kind of develop around this, where if you're not doing the proper prep, heck yeah, it's like you could end up with, again, unrealized gains. But no, they're realized according to the IRS because you're moving stuff around, and they want their tax money. So, one of the things we didn't prep this in the beginning, we were talking about it before. So you kind of start scratching your head, and you go, "God, I'm not touching cryptocurrency."
Yeah, it
right?
seems easier just to not start.
Which that's where I think, as part of this, and we've said a couple of episodes ago, this isn't even really going to be a podcast about altcoins or anything other than Bitcoin, and it's because if you want to play an altcoin arcade, you absolutely can. But it's for reasons like this, where it's like, no, similar to in equity, like if you're going to go buy some stocks, go buy Bitcoin and just hold on to it. Like, don't need to do anything to it, right? And again, purchasing Bitcoin and just holding on to it, not a taxable event.
No. So
that's the, if we had to pick a strategy in a way, that would be the prescriptive strategy. Mm-hmm. And if ever one day you ever do have, oh my gosh, Bitcoin soars to $1 million and you push sell,
it's a lot easier to keep track of one transaction.
Well, it's a lot easier. But also do your due diligence, like keep track of your cost basis, when you bought, how much you bought, the price of Bitcoin, things like that. So that way you have all your tax records ready to go.
Yeah.
But that's why I feel like even like, that altcoin universe kind of plays a role in this. It's one of these things that has nothing to do with Bitcoin itself. Mm-hmm. It has nothing to do with, there being an issue with Bitcoin. It's like, no, it's treated as property, and the IRS has certain tax codes around property. So I'll pause there. There's one other big thing I want to get to, but
I think that's a great
those are the scaries.
Story. You showed me that last week, and I just felt so bad for him.
The taxes are they suck to begin with. Could you imagine getting that in the mail where you're like, 40 grand.
Well, what's so sad too, if I think about it, like he got that letter in March. So he had like 3 weeks to really just be like,
you by April, you mean?
Yeah. Like
to figure it out.
Yeah. That's like a very short time horizon. That's why I kind of like this little episode. It's kind of a nice little short, just excerpt on those things. I mean, I had a couple things if we want to kind of like take down some rabbit holes of just interesting conversations, but that is kind of, those are really the main points I thought were important to get across.
I have one more, and again, this was inspired by someone that was DMing with us on Instagram about this. It was a really relevant, really good question, which was, okay, so
we got questions, we got guys.
Great questions. It was awesome.
That was exciting.
Keep them coming. So the question was super reasonable, which is, okay, even if for a moment we agree that Bitcoin, is super, super, super strong, wonderful store of value, and could potentially be a base layer money. Mm-hmm. Wait a minute, Taylor. Like, I swipe my debit card and my credit card every day. Mm-hmm. So if I'm buying and selling with Bitcoin in a way,
if you're selling, is every one of those moments a taxable event?
If I took Bitcoin
and
exchanged it for a banana, I was going to say banana too, right? It's like in current tax code, like, yes, you've exchanged something and likely there's a gain. So the person was asking this question, essentially sort of challenging, like, how can Bitcoin become a new base layer money,
right,
if this is the current tax code? And I love the question because the person's correct. Like, in the current ecosystem,
That'd be a real hurdle.
it couldn't. And that's where I think, right, what we get similarly to equities or bonds is a store of value.
Yeah.
You're investing in something that is going up over a period of time. And that's what you're primarily getting.
That makes
For
sense.
it to actually be a base layer money,
Mm-hmm.
there would have to be pretty substantial changes to how we think about Bitcoin, and how we choose to how the government chooses to tax it, and it would and thus treating it more like a currency.
But that has happened, correct?
So it has
Not
happened
here, not
in
here.
other countries.
In other countries.
Yes, not here.
That has
but
been
you are
adopted.
Mm-hmm.
Because I know we probably we mentioned that. I think it was like in other countries you
Yeah.
can go to McDonald's and buy with Bitcoin, or
You are
I
correct.
don't know if that's McDonald's true.
No,
but,
no, you are.
Yeah.
You're, yeah, El
So
Salvador.
they have adopted it as a currency, not just.
Not just a piece of property
Piece
that
of
would be treated
property.
similar to an equity.
So it has been done.
the fingers crossed.
I don't know how
moment,
successfully, but it has happened.
Well, and this is just theory at this point in time,
Mm-hmm.
but the fingers crossed moment would go, okay, if we believe in the thesis and the practical nature of Bitcoin as a store of value, and it potentially operating as a base layer money, like, do we believe in government's ability to change tax code to meet those needs? The other reason behind this was, again, from one of our recent episodes on a strategic Bitcoin reserve.
Mm-hmm.
So let's say the government starts procuring Bitcoin, and even potentially outside of the strategic Bitcoin reserve. Perhaps they procure Bitcoin to actually use it for whatever material reason that could develop in the future. Well, if the government's holding on to a ton of Bitcoin, right?
It behoove them.
Well, right, and
Yeah.
they have to transaction it. They got to pay taxes on it too. So it might be like,
Yeah.
actually, yes, we totally bought a ton of Bitcoin over here, and by the way, we changed the tax code because it's now a currency. It's not. So that, I think, is the other part of, if we actually see the utility and the adoption go up in the way that we think it will, I think there's going to be a number of factors leading towards that shift in that way.
Cool.
So that was my last.
Yeah,
thing.
it was a cool little chat back and
So
forth.
thank you for those questions. Genuinely, keep them coming because I don't know. I like that they spur the conversations. One other last bit, which again, these are fingers crossed hope moments.
Sure.
I think taxes in general are just like they're such a charged topic, right?
Yeah.
Nobody likes taxes. Here's in a way, maybe we'll shift the mindset a little bit to like glass half full versus glass half empty. Here's what you hope happens.
Mm-hmm.
What you hope happens is one day you buy some amount of Bitcoin
Mm-hmm.
and you hold on to it for a long period of time because your time preference is long. And Bitcoin goes up and 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 up. And again, maybe one day it hits $1 million.
Whew.
And then at that point, you're like, sure, I will sell, right? If you need to, or again, hopefully at that time it's more productive as a currency, and there's other ways to use it. But at that point, even if you have to pay a tax bill, that's an okay tax bill to pay because it went up. like that's the part, you know what I mean? It's like, but because you got to participate also in the gain.
Yeah.
Like you got the other side of that. So
Yeah.
like, yes, while the IRS wants their chunk of change, you also got all the other change.
Yeah.
And so
I think
that's
that's nice.
you know, it's not, yes, there are absolutely really terrible circumstances like what we read from Reddit of, yeah, you can get caught and you don't get to realize any gain, but you still owe a tax bill. Like that's what we're trying to avoid with any of this. But I just like to remember that if stuff does go up, that's a great problem to have.
That's a good point. Yeah, what did they say? Something about two things in life for certain: death and taxes.
Yeah.
So in that kind of statement, like cheesy statement, you don't have to treat Bitcoin as this like creepy, crazy espionage kind of money. It's like, no, just treat it the same and you'll be fine.
Yeah, absolutely.
Don't try and skate it. Then you're right. That's probably not
Yes.
going to lead to something good, but treat it as you would anything else. But the important part is keep track. It is taxed. That was really the main point of
That's
like
what we had.
people.
That was the episode.
It was funny because actually a few people were like taxation. It was a really big, oddly, it felt like a big concern of like how and what, because I think procuring Bitcoin and keeping track of your Bitcoin, that was complicated. So I think the assumption that the taxes surrounding Bitcoin would also be complicated, but if you really detangle it, they're not they're not even different then, are they?
Well, I would say with 99% similarities to, again, equities,
Yeah.
that the principles are the same.
Yeah.
I will say, because Bitcoin and cryptocurrencies, like these things are also new,
Mm-hmm.
there are, things that you have to be aware of. Like one, as an example, that I know we became alerted to, this was before the end of the year.
Yeah.
So it was the IRS basically saying, hey, all you Bitcoiners out there,
Oh, that's right. That was kind of tricky.
yeah, this was
That
tricky.
was sneaky.
They were like, we're shifting a little bit in our overall like reporting of your gain on Bitcoin.
Mm-hmm.
But basically what they were saying is, if you don't fill out the special form,
Mm-hmm.
we are going to, let's see, how would I phrase this? The IRS was basically saying, we are going to, they wanted to create a world where if you had a taxable event, so you sold Bitcoin, where you would pay the maximum amount of tax. I mean, so like let's say I had a couple of moments where I purchased Bitcoin 2 or 3 times. Maybe
Okay.
I purchased some Bitcoin in 2020, maybe I purchased some Bitcoin in 2022,
Mm-hmm.
and I purchased some Bitcoin in 2024.
Right.
So different cost bases
Yes.
over a period of time. The basically what the law was going to say was, hey, whenever you eventually sold the Bitcoin,
Mhm.
right? So some Bitcoin,
Yeah.
because I've had 3 different cost bases
Mhm.
to work off of, unless you filled out the special form, they were going to force you to use the furthest one away, because right? So if, like, let's say I bought Bitcoin
The
5 years
earliest
ago,
one?
the most farthest away in the past.
Okay, we'll say the earliest versus the latest. So the earliest, the first time you
Let's say, again,
Thought.
2015, right? 2015, 2020, and 2025. We'll separate
Yes.
by 5 years. So the if you didn't fill out the form, it said you have to use your cost basis from 2015. And the reason that the IRS would want to do that is because they're assuming that Bitcoin has gone up over the last 10 years. And so your chunk of change you'd have to pay is quite high.
the difference would be bigger.
Correct.
I was like, why? Okay,
'Cause your
that makes
cost
sense. At
basis
first,
is
I was like,
lower,
well, wouldn't that work in your
right?
advantage? Because but the difference is bigger.
Let's say the Bitcoin was
gotcha.
$5,000 at this point. Now it's
Yes.
$100,000.
They're
You're going
like,
to pay
that's
tax on a $95,000 gain.
even if you bought at a later date and the difference was
Correct.
smaller.
So that's where, if you filled out the
sneaky.
form and you say, oh, no, thank you, IRS. Actually, I would like to change, because kind of we've had about 10 years of crypto, and
Yeah.
there's been a way it's been taxed. I'm going to elect for a more favorable taxable component, which is basically last in, first out. Meaning, if I bought it in 2025, let's say I bought Bitcoin in 2015, 2020, and 2025.
Mm-hmm.
I don't want you to use the cost basis from 2015. I want you to use the cost basis from 2025.
Got it.
Even though I might be selling some of the Bitcoin I procured from 2025, and heck yeah, I'm
okay.
making right 95K.
Sure.
Well, I'm gonna use the cost basis from before, so that way the taxes aren't as large. Right.
Can
at
you
that point in
Google that
time.
right now just to see?
Sure. Okay. This is why people are afraid of taxes, or at least maybe not afraid, but don't
Afraid
like
of
taxes.
paying, or not afraid. You're right. No one
They're
likes
just
paying.
annoying. So.
This is kind of a buzzkill, and I know it goes to good stuff.
So here's the quick summary.
Yes.
Quick, who knows? This could take 15 minutes. The IRS has introduced significant changes to the tax treatment of cryptocurrencies like Bitcoin, particularly concerning the calculation of cost basis, and the permissible accounting methods. Fancy words. Transition to what's called the FIFO, FIFO method.
It's a fun word.
Historically, U.S. taxpayers could choose among various accounting methods for calculating the cost basis of their cryptocurrency holdings,
Okay.
including FIFO,
Okay.
first in, first out,
Oh.
which assumes the earliest acquired assets are sold first, last in, first out, which assumes the most recently acquired assets assumes
Out first.
assumes the most recently, required assets are sold first.
Okay.
And HIFO, highest in
Fee,
first
fi,
out
fo, fum.
prioritizes selling assets with the highest purchase price first.
Okay.
Okay, so again, we're
So
going
you
to
can
come
pick
back.
your poison.
The historically U.S. taxpayers could choose
Okay.
amongst those three methods, right? Which is ultimately about determining cost basis. However, with the introduction of Revenue Procedure 2024-28,
Okay.
the IRS mandates a shift to the FIFO method, first in, first out, for digital assets starting January 1st, 2025. This means taxpayers must calculate gains and losses based on the assumption that the oldest units of cryptocurrency are
Okay.
sold first. Again, the oldest units, because that means
That's
that the
the
gain's
the
probably
biggest
going to be the
gains.
biggest. Implications of the change. Tax liability. The FIFO method can result in higher taxable gains during periods of rising cryptocurrency prices, as older assets typically have a lower cost basis. Record keeping. Taxpayers need to maintain meticulous records of their cryptocurrency transactions to accurately determine the cost basis of each unit. Almost there.
Okay.
Safe harbor allocation
I
plan.
just drifted for two. I was like,
know.
well, okay.
To
It's
facilitate...
getting boring.
I know, I'm sorry. Well, you
I'm just
asked.
kidding. I did ask. No.
To facilitate the transition and mitigate potential tax liabilities, the IRS has introduced a safe harbor allocation plan.
Okay.
Taxpayers are encouraged to adopt this plan by December 31st, 2024. Do you have a time machine? To ensure compliance and potentially reduce penalties associated with the new reporting adjustments. So thus I was incorrect. This did go into place, and we did this. So we knew about the changes. We downloaded the form. We signed and dated the form. So we're secured of like, no, we would like the accounting method that we would choose of our choice. So we have that in our tax records.
Okay. Well, that's good. I'm glad we clarified, because I would hate to say like, hey, go check it out. It's still a thing. But okay, so closed. Sorry.
See, but thus, talk to a tax professional about these. Understand the implications of if you are going to constantly be buying and selling cryptocurrencies, what that means. If you keep it simple and you buy and hold over a longer period of time, it's naturally going to be a lot simpler and hopefully less stressful from a tax preparedness perspective. But again, fingers crossed, hopefully good things happen to Bitcoin. Hopefully number goes up. And if you are ever
You're right.
in
If you're
that
paying
situation,
higher taxes, it is an indication of success.
yes,
The silver lining.
the
of
silver lining,
something that
of
is
higher taxes.
nigh impossible to avoid. So that makes sense. I was thinking about, because it's our show and we have mics, and it's been fun. I feel like we've shown a little bit more of our personalities on social media, which we're working on. It's a learning curve. Anything like at the end? Like, I feel like we covered those types of
taxes.
things.
Boom.
Taxes.
Chapter closed.
But like anything you want to talk about, just, thoughts by Taylor. I mean, I have to say, after doing 7 of these, with the stuff that was happening this week with the tariffs, and I feel like just like with Bitcoin, and again, I keep saying the Bitcoin mindset.
Yeah.
It has really sitting here talking about this, having the accountability of what I say, and having to make sure that I'm speaking objectively.
Yeah.
That has started to become habit. And then I really liked that, with, even though it was like crazy town USA out there. I mean, even I was hearing things from all sorts of people. People were saying kind of like big statements, fear-inducing statements.
Example.
Friends and family, like, we're going into another depression.
Oh, with the recent market
would say,
got it. Sorry.
Sorry, to be clear, not like on the news, but just, I mean,
On
I'm
the
sure
news
it was
too. Yeah,
the news
for sure.
too.
For sure.
But it was instantly like soundbite telephone.
Soundbite Nation.
It was. And I think I personally do a decent job for myself, just because I know it's my preference of like, I try and keep that soundbite low, and you and I talk about things together so that I'm not overwhelmed by those things, because it's scary when you start to just focus on the soundbite.
Yes.
But it was nice to see. This is nice to see. Silver lining of the week personally, but big, huge changes that I don't understand. I was personally accountable to making sure I was not adding noise. So I didn't, in social conversations, I didn't jump to the, this, that, this. I did not add, because I was not informed. I didn't take the time yet. It's on my list to go and research, like, what is the end game? What's the long-term vision? Why is this happening? What is what is actually happening? When does it go in effect? Who will be most affected? But actually taking the time to do the research, I did not chime in conversation and say, I know, oh my gosh, we're all going to be. So I felt that this podcast started to like manifest in my daily life this week of like, I did not add to the noise, and I was proud of that. And I think it's as a result of what we're doing here. So
I love the seek to understand and to not
I feel like this week it was very tempting.
Oh, very well.
Yeah.
To your point, to be fair, right? Of like if we were to like recap, like what are some of the headlines that we're hearing, right?
Yeah.
It's like market crash, right?
Big
like
words.
market tanked. Like even as I opened, I'm like, what does tanked means, right? I don't want to say that these things are inconsequential, right? Even for you and I sitting here, like when you really wrap your arms around what does it mean for us and for the world if the S&P 500
drops 11%.
right? What does that mean? Like right? And there
Asking
are
the question before.
there are absolutely implications, right? Red is bad, green is good. Like at least like
For
we can
sure.
understand those things. I like, to your point on the personal side of things, I think having operated in the space of Bitcoin for a very long time, you get very used to volatility. Like that's the name of the game, at least on the Bitcoin side.
Yeah.
So in a way, I don't want to say it like prepares you to not panic. Like when things like again, if the S&P dips by 10%, but it definitely does. You get used to swings and trends and how things are put together.
That's a good point.
The last thing I will say, a little teaser, speaking of that volatility piece and why this is a very interesting time, both for the market and for Bitcoin specifically. So right before this podcast, we were sitting there and I was asking ChatGPT some questions. And when you... these are just opinions, right? There is no...
Well, I kind of liked having an opinion section because I feel like a lot of times most of our episodes are very explanatory.
Explanatory.
Is
Yeah,
that a
we're
word?
explaining. Yeah, so
You know?
versus just like openly
And
conversing.
we're very cautious about dispelling opinions
Yes.
on obviously financial advice.
Yes.
But I think this is nice at the end.
So this one's interesting. So let's say you are an investor, you're an individual, and maybe you logged into your brokerage, right? And you're seeing red, you're heavily invested in the S&P, and you're like, good golly, I lost 10% of its value, 11% of its value. And again, to be fair, you haven't lost unless you sold, like, right? It's like that's the other.
It's a living, breathing entity.
It's a living, breathing entity. It's like as long as you haven't pushed the sell button, like you haven't lost anything yet. Like that's the first thing.
I think.
But that's one piece. But let's say
interesting.
you're staring at a number and you're like, I've been investing in the S&P and I just saw this thing dip 10 or 11%. So here's a little bit interesting, and this is very different than what's happened over the last, I don't know, 2009. Hold on, 19, 20, I don't know, 14 years, 15 years. Bitcoin, which is commonly very closely correlated to the market. So like, right, market goes up 10%, Bitcoin goes up 10%, market goes down X%, right? It typically follows almost like for like. In this particular occasion, Bitcoin only dropped about 5%.
Interesting.
So, and I know, right, it's like you start thinking of these numbers, 5% versus 10%, you go, but I just want to like reiterate, that's only half as much.
I was going to say, but it is 50%.
50% difference, right? So if you were
were
sitting there, like, let's even think of someone that's, let's even say like mid 50s, right? Maybe you're not like fully retirement yet, but you're staring at a 10% total loss in your portfolio. With any dollars that were invested in Bitcoin, you only experienced half as much pain. And so that is it's a pretty interesting signal. I won't call it a big signal. I'll call it interesting to say, wow, Bitcoin has decoupled in a pretty material way from normal capital markets. Is it going to be decoupled for the long term? Who knows? But this was the largest loss, and I think the last 5 years, like the last biggest time was March 2020 during COVID. And that was, by the way, a global pandemic. It was like a pretty big deal. So this is just really fascinating to see Bitcoin actually being less volatile than the markets, which is crazy.
That's got to be a first. I mean, I feel like Bitcoin volatility are like brother and sister.
I just think that's interesting. If you just look at the math itself, Bitcoin only lost half as much as the market. And that's fascinating.
That
so
is
just
really
another
interesting.
signal leading towards this is something to pay attention to.
Yeah.
So I'll end there.
Perfect. I really empathize with anyone who really felt that this week, and and will continue to feel it, and it'll be interesting to see and continue to discuss like what happens, the decoupling of the Bitcoin volatility between those things. But yeah, that was something that just personally that stood out because I feel like it was really easy to just, and it would be secondhand sources because I was keeping a bit of a bubble around myself this week with all of it. So I encourage you, if you're listening, to maybe take that same step, because I actually felt better personally going through it too, because I wasn't indulging emotionally in it. I mean, logically, I understood that things were shifting and things were happening, but by not joining in on the fervor, I felt better too. And it's still on my list to go do my own reading and my own research and kind of understand, a little bit more about it before I jump in, and perhaps once I know, then I can join conversations more meaningfully and feel comfortable participating. I feel like a lot of times if I just jump in and I'm not well read, I do feel uncomfortable, which also adds to something just personally that I don't like leaving a conversation feeling like I fanned the flame. Totally. So that was just my final thought.
Well, with that, thanks again for listening. And if you do have questions, find us on Instagram, YouTube. I think there is also the ability to comment on Spotify or Apple, but I don't know how to read those comments.
I think I saw that too. You can do like polls and stuff too. I don't think we're popular enough for polls, and
just you wait. Bitcoin taxes.
Yes, but we will do our best to answer or address any questions in this. It's really fun for us. So anyway, have a great rest of your whatever time of day you're listening.
Evening, morning, whatever it is.
And that is us on Two Hearts, One Bitcoin.
Bye for now.
Bye.